Hi, it's Rick here for your market recap for Friday, September the 16th. The model remains red. Like I said yesterday, if I had the ability to color code this a deeper red, it would have gone even deeper again today because things just get progressively worse. So not going to belabor the point on the chart. Everything is definitively red and no go. To the individual components, Toronto was down almost 1% today. QQQ is down 0.6, Spiders down about 0.8, and both the mid caps and small caps have been down about 1.5%. Here's the chart of the small caps. It was a nasty gap down, traded lower. It's interesting. It did take out the lows from wherever that was, September the 6th, but then recovered. So possible encouragement. You see the volume here is, get my tools out here. The volume here is spiked up, but today was so-called triple witching hour, so option expiry date. So take that with a grain of salt. I don't think this was a lot of institutional selling. The QQQ. I remember I drew these scenarios out about 3 days ago. And I remember 3 days ago, I said, in a perfect world for this case, the bullish case here, it was after this big red bar down. If we had had a bar like we had today, if this had happened on, that'd be Wednesday, that would have been a good thing. That would have put me more in a frame of mind. We're going back up here because it would have gapped down, below these lows and then recovered and closed near the high. But the fact that it gapped down today, it did close near the high, is positive, but we're still firmly on this path. So until I draw a couple more days in here, as far as I'm concerned, we're still headed down this path here. So keep your powder dry. If it's any, I don't know if it's consolation is the right word. Oh, and just look at the sectors today. Gold actually had a good day, which I don't trade gold, so it doesn't make any difference to me. And then on the downside, transportations. I guess the settling of the strike in the U.S. or the possibility of a strike was not perceived by the market as good. So obviously their costs are going to go up. So it had a brutally bad day today, as did airlines, down 4%, and China stocks are down about 4%. So everywhere else was losses pretty much across the board. Just a smattering of green. Mark Minervini sent out a note this morning. Let's go back to the Qs. Whether or not the market is going down further, have we hit a bottom? He thinks a bottom is close as long as we don't get into a severe recession, but it's potentially the downside risk from here is probably, in his words, only 10 to 12%. So if I draw a line here, see, we're already down from the year 29%. So he thinks it'll drop another, could drop another 10% to 12% from here, which would take us down to about this 260 level in about here, which would make a total decline then for the year of about, drop from here, take us down to, that's about a 35% decline. So that's quite possible. On the other hand, if we do over the next few months get into a severe recession, we could be all the way back down here somewhere, which would be another 35% over and above that. So keep your powder dry, stay in cash, and things will get better at some point in time. I did do I spent an hour and a half last night doing a video on ideas for restructuring your portfolio. for when times get better. Unfortunately, after spending an hour and a half on it, I completed it. I reviewed it this morning before I published it. And I guess I should leave this technology to my kids and grandkids because old grandpa is having a problem with it. So I had to, the bottom line is I'm gonna have to redo it. So I'm gonna have to try and find some time this weekend and get it out to you. But based on market action, right now, there is no rush to think about structuring your portfolio or restructuring it if you're in that camp, because most of us are in cash anyway, so we're just sitting and waiting. But anyway, I'll get that out to you as soon as we can. I think you'll find it quite instructive. So that's, I should just I'll quickly review my open positions. I added a couple of new ones today, which are more speculative. ARPL had a nasty day today, but did recover. My line in the sand was down here. This is what I was looking for on the weekly chart, is to come back to this 10-week moving average. So now we got at an interesting point. We hit it, actually crossed through it. I didn't sell. But now this becomes my line in the sand. I have a relatively small position here, so I can take a wide stop. But definitely my stop goes under 22.90 if it takes out today's low. But I'm going to be looking to add to this position because based on this weekly chart, this has legs to grow and based on fundamentals. So I'm keeping this one. I'm looking to add, or certainly I'll cut fade here at 22.90. Enphase continues to perform well in this down market. I added a new position yesterday, and I added to it again today at, I think my entry price was 308 even, and it closed at 318. So this is performing very well in a down market. Now, it could roll over, head back down here if the market really gets weak. It's not going to get protected necessarily, but it is showing great relative strength. So this has the potential to be a market leader, and I want to participate somehow. North Rock Grumman, same thing, held up today. Didn't do anything with it. I have a very tight stop here at just under 480. I was in at 485, which is basically where it closed. So nothing to do here. A couple of new small positions, just sort of more speculative. Again, they're holding up in a down market. See, the overall market is headed this way, and Ardmore Shipping is going sideways, has really good fundamentals, strong earnings, strong growth, sales growth. So I'm in at 10, and I have it shows up better actually on a 15-minute chart. I entered this on the break of this 5-day moving average. So I'm in at 10, and I have a stop, really tight stop at 980. So I'm really small risk on this one. And the next one is NBIX, which again, you can see the market has been going like this. This one is holding up quite nicely after a big gap up here on an announcement of, it's a biotech company. So they had some major announcement of a clinical trial that worked. So it's digesting this big jump here. And I'm in, we'll go back here. I did the same thing. I entered here on the break of the 5-day moving average at 105.20. Ridiculously small stop at 104.60. So I'm risking 60 cents on $105 stock, which is kind of ridiculous. But next thing you know, it on huge volume right at the close, it actually traded over 106. So this one could end up being a monster winner, or if it takes me out, it takes out the stop, like who cares? It's a tiny, tiny, tiny loss. So that's it for today. Hopefully I'll get my computer gremlins fixed for my video and get something out to you this weekend. Cheers, everyone.